complete guide for NRIs selling property in India. TDS, capital gains, repatriation and legal compliance. Hi friends, I am CA Ushma Jain. Welcome back to my channel. Hope you are having a great and productive day. If you are an NRI planning to sell property in India, stay with me for the next few minutes. This video is going to be packed with everything you need to know, from taxes and TDS to power of attorney, legal compliance and how to bring your money abroad safely. So what you will learn in this video: TDS on property sales by NRIs, applying for lower Nil TDS Certificate, TAN requirement for the buyer, power of attorney, repatriation of funds abroad, legal documentation and compliance, filing your income tax return, collecting TDS certificate from buyer, common mistakes to avoid. TDS on property sale by NRIs. Let's start with a fundamental. What is TDS and how is it different from capital gain tax? TDS or tax deducted at source is a tax the buyer must deduct on the entire sale amount, not just on your profit. This deduction happens when the sale amount is credited to your account. After the financial year ends, you will file your tax return based on actual capital gain, which is your profit after deducting cost and expenses. In most cases, the TDS deducted is more than your actual tax liability. That's exactly why filing your tax return is essential. You can claim a refund for the extra TDS paid. Want a dedicated video explaining the difference between TDS and capital gains? Drop a comment, I'll make one. Now next question is, what is prevailing TDS rates? Income tax department has made few changes in TDS rates. Earlier, when sale consideration was between 0 to 50 lakhs, TDS rate was 20% plus 4% surcharge, which comes out to be 20.8%. But now this rate has been reduced to 12.5% plus 4% surcharge, which is 13%. If sale consideration is between 50 lakhs to 1 CR, then earlier TDS rate was 20% plus 10% surcharge plus 4% education cess, which was 22.88%. But now it has been reduced to 14.3%. And if sale consideration is more than 1 CR and above, then earlier TDS rate was 23.92% and now it is 14.95%. Please note, these are applicable only on long-term capital assets, that is assets held for more than 2 years. For assets held for less than 2 years, that is short-term assets, the TDS rate is 30% plus surcharge plus cess. Even if your property sells for less than 50 lakhs, TDS still applies for NRIs. Buyers must deduct it and deposit using Form 27Q, not 26QB, which is for resident sellers. Apply for a lower or Nil TDS certificate, that is Form 13. Want to reduce the TDS deduction? You can apply to the income tax department for a lower or Nil TDS certificate before the sale. Start this process early because it typically takes 4 weeks. To file an application, you will need PAN, initial sale agreement, that is MOU, proof of purchase cost like builder receipts, payment proofs, sale deed executed at the time of purchase, capital gain calculation, previous ITRs, buyer's TAN, etc. Once approved, share this certificate with the buyer. Only then can they deduct TDS at the reduced rate. Next is TAN requirement for buyer. As an NRI seller, your buyer must have a TAN. TAN is tax deduction account number. Without it, they can't deposit TDS on your behalf. Many buyers don't know this, so either guide them or involve a professional to get them a TAN number. Power of attorney, POA. If you are abroad and can't attend the property registration in person, you can execute a POA in favor of someone in India, a family member, friend or a lawyer. Make sure to consult a legal expert to do this correctly. Even if the POA holder handles the sale, you remain responsible for TDS and taxes as the NRI seller. Now next point is receiving sale proceeds and repatriation. Once the deal is closed, the buyer must deposit the funds into your NRO account. To repatriate funds abroad, you can remit up to $1 million per financial year. Your bank may require Form 15CA and 15CB. Keep all documents handy like sale deed, purchase cost and tax proof, legal documentation and due diligence. Before you list your property, collect original sale deed, builder receipts, payment proofs, clear any outstanding home loan. Make sure your PAN is active. Keep soft copies of all documents for future use. Must have documents include sale deed and purchase agreement, capital gain calculations, TDS certificate, that is Form 16A, lower TDS certificate if applicable, Form 15CA and CB, NRO, NRE account statements, etc. One important point which I want to mention here is get Form 16A from the buyer as a proof of TDS deduction. It is issued only after the quarter ends. So follow up. Without this, your TDS credit won't reflect in Form 26AS and you can't claim it in your tax return. Filing your income tax return. Whether or not you have other income in India, you must file your ITR in the year you sell the property. Report the capital gain, whether it is long term or short term. Claim exemption if eligible, like reinvestment in another property or government specified bonds. Claim refund of extra TDS. Common mistakes which NRIs make. There are few common mistakes which NRIs make, like not applying for lower TDS certificate early, letting buyer deposit sale amount in saving account rather than NRO account, forgetting to file ITR post sale, not collecting TDS certificate Form 16A from the buyer, and failing to keep important documents for records. Final thoughts. Selling property in India as an NRI requires strategic planning, proper documentation and close coordination with the buyer. Start early, consult a tax expert and ensure full compliance to avoid unwanted hassles. If you found this video helpful, give a thumbs up and share with fellow NRIs. Got questions or need help? Feel free to reach out. I am here to assist you. See you in the next video. Take care and goodbye.